Well, hello, everybody. Jamie here, your favorite CPA and profit strategist. And I'm going to be honest, y'all, I'm in a mood today. You're in for a treat because you're going to get a Jamie rant today. And that rant is going to be about the employee retention tax credit. I have done tons and tons of content on this on my channel. And the goal of that content is to be a truth teller in this space because there is so much freaking shadiness going on still, y'all. So let's take a step back before I get too fired up. That will come. But let's take a step back because I want to first say, what is the Employee Retention Tax Credit, the ERTC, or sometimes called ERC? That is a tax credit for business owners that is related to COVID. It is something that you can still claim. Ultimately, you can claim it for the year 2020 up until April of 2024, and you can claim it for 2021, at least the first 3 quarters. There's a lot of, specifics here we're not going to get into. I have other content on that, but you can claim it for 2021 up until April of 2025. At least that's as it stands right now, unless the IRS makes changes. You get it by filing an amended payroll report. So you do need to have employees, not just yourself, not just family members who are on W-2 paid via payroll. And those would be the employees that would be eligible potentially for this. You're going to see everywhere under the sun, yes, up to $26,000 per employee. That is true. But y'all, just like with anything, when there is opportunity, when there is money around, right, there are going to be sharks that are going to be attracted. It is blood to sharks, right? This money from the federal government is attracting all kinds of bad actors. And there's a scale, right? There's like the bad actors of total scam, take your money and run, steal your private information, etc. Those exist. But what I'm seeing more are people kind of on this other end of the scam spectrum, but it's still scammy, or at the very least, extremely unethical, okay? So what is really going on here with the ERTC? Well, first of all, let's talk about the opportunity. How did we get to this place? We got to this place because back when all the new, COVID rules and COVID credits and COVID everything was rolling out, all the support to business owners, right? ERC kind of flew under the radar because PPP was the focus. It could get money in your hands faster, and there were some rules at the beginning where you couldn't have both at the same time. So you couldn't claim the ERC credit and PPP at the same time. That later changed, and they extended it into 2021, at least for the first 3 quarters. Fourth quarter is kind of a separate instance where you have to be a recovery startup business to get it. But ultimately, they made the rules even more favorable in 2021 for being able to get money to essentially, help offset the cost of keeping your employees on payroll, even when you were adversely affected by COVID. And there are a couple of different ways to qualify for this. And I think the one that people know most is the way to qualify, which is based on a drop in gross receipts. So you're comparing 2019 versus 2020 and 2019 versus 2021. If you have a certain amount of gross receipts drop, which is generally going to be either 20% or 50%, depending on the time frame. Again, not going to get into all the specifics here for this rant, but ultimately gross receipts, that's the easiest way to qualify in terms of supporting that, right? You just need your financial records. You need to show that you had this drop in gross receipts that, and that will qualify you for those quarters if you kept employees on payroll during that time. Okay. But there is another way, and that second way is the way that is being exploited the most right now. And that is, you can also qualify if there was a full or partial shutdown via governmental order. That second part is really important. Okay. So a lot of the companies out there that are yelling from, the rooftops, like, hey, you can qualify for this. We can get you hundreds of thousands, millions of dollars, right? You're probably being like completely bombarded with, spammy type messages, maybe on LinkedIn or wherever you are. You might be I'm getting all kinds of Facebook messages and Facebook ads that are targeted towards me. I'm hearing ads on the radio. Heck, you've got celebrities who are basically advocating for these companies. I saw one from the Shark Tank guy. The guy from Modern Family was in an ad on my feed the other day for a random ERC company. It's everywhere. It's absolutely everywhere. And most of those companies, I won't say most, a lot, I'll take it back a little. A lot of those companies, right, are not being forthcoming with how they are charging you for the ERC. They are saying, hey, come see us, even if your accountant said that you didn't qualify. We're gonna, take a look again, right? And they're getting really aggressive in some cases with the way that they're saying that they qualify, right? With how they are interpreting those rules. And it's not even just interpretation, right? It'd be one thing if it was just like interpretation. We're talking just, they're straight out incorrect. From the standpoint of, if you are shut down via governmental order, you have to have a governmental order with dates that you're shut down. Those are the only dates that you would then be able to use ERC for. You can't take the whole quarter if you were shut down for 2 weeks. A partial shutdown means that you actually had to be under some type of governmental order that wouldn't allow you to be able to do your work, right? If you could work from home, if you could do all the things that you normally would, if you weren't told to shut down by a governmental order, you wouldn't qualify under that second piece. But that's the piece they're trying to get everybody to qualify under, okay? And taking really aggressive positions on that matter. And it's going to come to a head at some point. It's going to come to a head. Another thing that I've heard a lot of is people saying, well, they said that I qualify because of supply chain disruption, right? If your supply chain was disrupted, then you can qualify. That's only under very, very siloed circumstances where you have a supplier maybe that was shut down via governmental order, not just, it's taking longer to get things, and you can't be able to go to another supplier and get the exact same thing from them, right? This has to actually have a more than nominal impact on your business. A lot of people had way better years in 2021 than 2019, and they're still being told that they qualify for the ERC, which would be very difficult to say that a shutdown had more than a nominal effect if your revenues are through the roof comparatively to a couple years prior before COVID, right? So if it seems too good to be true, it doesn't mean it always is, but it probably is, right? If you didn't suffer, really have, that hardship during COVID at all, and yet you're being told that you can get $1 million, there's probably something you need to be asking a question about, right? There are probably more questions, and you need to be aware as the person who is filing for this. And this is where I get really jazzed up, because this is something that's actually become very personal to me. My entire goal when talking about ERC, it's not even what I do. I primarily like to, teach people about financial literacy, help them make more profit in their business. But this was one of those places where I felt like I wanted to give that information directly to business owners so that they could arm themselves and have that information so that they could walk into those conversations and know if what the other person was telling them was accurate or not. Whether that's your accountant telling you don't qualify and you're like, actually, I really think I do because of this, this, and this. Or on the flip side, it's some big ERC mill telling you do qualify for some tremendous amount of money, right? And you're like, actually, I don't know that I do, right? I heard blah, 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 blah. So I want you to have that information and be armed. And again, I have tons and tons of, content that I've put out about this. And I am not referring anybody to like a big ERC mill. I do have a vendor that I'm sending things to. She doesn't give me money on like a per person basis or anything like that. I just send people to her because I know that she knows what she's doing. She's a professional. She's not charging, unethical fees, right? She will do the work for you. But ultimately, the only thing I'm selling is a $27 spreadsheet. That's it. I've sold thousands of them, but I'm selling a $27 spreadsheet. And the reason that this has become personal for me is because that specific spreadsheet that I sold for small business owners has been purchased by some big ERC companies and is being used to do ERC calculations, even for people who don't actually qualify, okay? Or maybe don't qualify for as much. And they're using that, and then they're turning around and charging those people tens of thousands, hundreds of thousands of dollars for that work that they're doing, okay? Using my intellectual property that they don't have the right to use. And I have sent out multiple cease and desists at this point in time to companies who are doing this. And it tends to be those that are charging these unconscionable percentage fees, also known as contingent fees. So let's talk about fees right now. Again, this is a rant. There is no outline for this specific YouTube video. I am frustrated at this point, and I want to make it clear how prevalent this is. Contingent fees. Okay. The vast majority of people out there that are these big companies anyway, that you're seeing ads for, you're hearing ads for, right? They are charging contingent fees. What does that mean? That means they're usually charging you anywhere from 15, 20, 25%, right, of the actual credit that they calculate. So let's say they came back and said, okay, you qualify for a credit of $1 million. Awesome. That's fabulous. But now you're going to have to pay us $250,000. A lot of people have come back actually and gotten mad at me for my my opinion on contingent fees. And the reason that they're mad, they're like, well, but I wasn't going to get anything. And so, I'm still going to get $750,000 more than what I would have had. So isn't that better? Like, why is that so bad? And my answer to that is a few reasons. I consider that an unconscionable fee. Why? Because that credit may have taken, like, let's be completely generous here, a week of somebody's time to do. That's very generous for how long it would take to calculate that out, right? If you have the right tools and everything, calculate that out, refile those 941Xs. Let's call it a week. $250,000 for that. $250,000. For a business owner that was negatively impacted, the reason for that credit is because they were negatively impacted by COVID, and they're going to take $250,000 of that credit for their own pocket? And here's the other thing with contingent fees. It's not just my opinion on contingent fees here. This is the general opinion of contingent fees and how they do not align with best interests. That's what I've seen a lot of companies say, well, charging contingent fees aligns us because then we are motivated to get you the best credit possible if we're charging contingent fees, right? Wouldn't you do that anyway? Like, why are you not trying to get the best credit? What it does is it motivates bad actors instead to inflate the amount of credit that is due to you and to file it, especially knowing the fact that the IRS is not reviewing these in real time. They don't even have the information to do that. The only thing they're getting is a 941X, and then they're giving the money out based off of that 941X, right? They don't have any of the support. They're not requiring you to give any of the support for why you think you qualify. So people are getting this money thinking, oh, I guess I did qualify. That's great. Here's, even a lot of companies that are saying, well, we're not going to take the money until you get the credit. Just getting the money doesn't mean you actually qualified. And it doesn't mean that the IRS in a year from now, 2 years from now, 3 years from now isn't going to come back and say, actually, that credit was not due to you. Give us all your support. We're going to audit it. Oh, nope, you actually didn't qualify for that. We need that money back, and we need the full amount back. I don't care what you paid for this to be done. That company that did that is going to be long gone. How do I know? Because none of them have their actual names on these websites. You don't even know who they are. They're like nameless, faceless that you go to like the About Us page. A lot of them don't even have it. And it's like, we've been, in this industry. And like, they're brand new companies that popped up overnight, basically. They didn't exist probably more than a year and a half ago. And they did it because they're opportunistic. And those people are going to be in the wind when the chickens come home to roost. That is the plan here. They're not going to give you audit support. They're not going to give you a refund when the IRS claws back that money. They're not going to pay those penalties and fines that you are going to have for basically getting money that wasn't yours to begin with. And you're going to be left saying, what the heck? Right? So again, my opinion on contingency fees is my opinion, but it's also the opinion of the Department of Treasury and the IRS and the AICPA for that matter, meaning it is considered unethical to charge contingent fees for all of these reasons, right? It is an unethical thing to do, and it is oftentimes even worse if you're charging an unconscionable fee. And that's a lot of times what contingency fees are. So I'm going to show you really quickly here, Circular 230, which was put out by the Department of Treasury, and it goes into detail about what is okay for providers to do. Now I'm going to get you, because there are some technicalities that people will point out here, but I just want to show you this to you, and then I'm going to show you how I support my opinion that even if you aren't a CPA, this still applies to you. So here we go. This is specifically from the Department of Treasury, and this is Circular 230, where it says, in general, a practitioner may not charge an unconscionable fee. Now, it doesn't go into detail here, but if you're making $250,000 for a couple of days or a week's work, probably unconscionable. in connection with any matter before the IRS. Any matter, not just income tax returns. That includes payroll tax returns, any kind of tax return at all. Then it says contingent fees specifically, except as provided in certain paragraphs, which let me tell you, these do not qualify for those exemptions. A practitioner may not charge a contingent fee for services rendered in connection with any matter before the IRS. So what is a contingent fee? Contingent fee is any fee that is based in whole or in part on whether or not a position taken on a tax return or other filing avoids challenge by the IRS or is sustained either by the IRS or in litigation. So a percentage of the credit. A contingent fee includes a fee that is based on a percentage of the refund reported on a return. Notice this doesn't say on a income tax return, on any kind of tax return. That is based on a percentage of the taxes saved or that otherwise depends on the specific result attained, okay? So this is where it's very clear in this guidance that this is not okay. And this is guidance for ethical reasons. This exists for ethical reasons. So what I've heard, and I've made a habit of this, and I know I'm talking extremely fast, and this is what I do when I'm very worked up. So just like go on YouTube and turn me down a little bit if you want me to go at like 0.75 speed. If I'm going too fast for you, don't comment on YouTube. You have the controls for that reason, okay? I know I get a lot of people telling me I talk too fast, but that's because I feel strongly about this, okay? I feel very, very strongly about this. I have made a habit of anytime, I get approached by a ton of ERC companies, a ton of ERC. It's like they've never seen my content either, which makes me laugh. But these companies come to me and they see that, people are paying attention to what I say about ERC and they want to partner with me. And they'll offer these like massive kickbacks basically to me for sending people to their specific company for ERC work. I have said no to all of those, which probably could have added up to hundreds of thousands, if not $1 million+ had I been doing that this entire time instead of selling a $27 spreadsheet. But again, the whole unconscionable thing, I can't do it. I'm never going to do it. Sorry. But what I want to say here is they keep coming to me with these proposals to work with them. And the very first question I ask is, how do you charge for your ERC work? Because almost always it doesn't say on the website. Red flag number one, y'all. If it doesn't say how they charge on the website, if it's like start your free quote today or get on a call with us or, whatever, don't do it. If it's requiring an email address or a phone number to tell you anything about whether you qualify, don't do it. Okay, there's not transparency there. They're not telling you what's going on. They're holding that on purpose. So don't do it. Anyway, I asked them how they charge, which almost always comes back to say, well, industry standard is around 15 to 20% of the blah, 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 right? And the next question that I ask is, okay, well, how are you guys, doing this and getting around Circular 230 and contingent fees? Why are you charging this and how do you think that is okay? I get one of two answers. They ghost me, most often. Or the second answer I've gotten, and that's usually if I'm talking to somebody in person. I was talking to a company a couple of weeks ago at a conference that I was at where they were trying to get accountants on board to send their clients to this company that charged 20% in ERC fees. And I asked them, well, what do you think about Circular 230 and the fact that this is a contingent fee? And the answer I got from them, and have gotten from actually a few other, including one large company that I won't say their name, but it's a payroll company. The answer that I have gotten is, well, we have a team of lawyers and they are confident that this is okay and that this isn't a problem. And my thought process in that is, if you need a team of lawyers to get around a statute that was put in for ethical reasons, then we have a little bit of a problem, right? If we're looking for loopholes, legal loopholes, if you have a literal team of lawyers that you are hiring rather than just charge a conscionable fee that is based on the actual work done and not a percentage, is that so hard to do? But yet, instead, you'd rather have a team of lawyers to advise you and come up with really obscure case law and how they would defend the fact that is marginally, questionably legal. Okay. I don't know. I'm not a lawyer. I cannot tell you legally whether it would hold up in court or not, but my alarm bells, that's red flag number 2. If you need a team of lawyers to get around ethical statutes, what are we doing here? We're not aligned. That does not mean that we are aligned, okay, in our expectations here. And that's not the only excuse that they give, right? They also say, well, we're not CPAs, so therefore we're not subject to the rules of Circular 230 because that is for licensed professionals. Which again, I'm like, so because you're held to a lower standard, or at least you think you're held to a lower standard, you can do things that, professionals can't do? How is that a good selling point? Like, well, we're not CPAs. We're just a random company that doesn't even put our name or who we are or what background we have or what right we have actually doing this work on our website, and therefore we can get away with whatever the heck we want. Not a great selling point, y'all, but that's what they tell me. And because I'm like, that doesn't really sound right? Like, why would that loophole exist? Why would they be able to do something that I as a CPA couldn't do? Well, I looked up the rules on Circular 230. And hey, on the IRS website, let's see what it says about who Circular 230 and the rules of professionalism really apply to here. Oh, look. So yes, it does say state licensed attorneys and CPAs. Okay, great. But it also says people who are, enrolled agents, really anyone like that in that tax world. Individuals providing appraisals. There are a few different things, but what caught me here is that it's not just licensed, okay? If you come down here, licensed and unlicensed individuals who give written advice with respect to any entity, transaction, plan or arrangement, or other plan or arrangement, which is of a type the IRS determines as having a potential for tax avoidance or evasion. For this purpose, written advice means all forms of written material, including the content of an email, given in connection with any law or regulation administered by the IRS, etc., etc., etc. Well, as far as potential tax fraud goes, the IRS has now warned multiple times about ERC scams and ERC mills that take advantage of people, right? And they have put them on the top of their dirty dozen list, which are the biggest tax frauds going on right now, okay? And again, it's a spectrum. It doesn't mean they're going to take your money and run. You might get that money, but that doesn't mean you deserved it. And even if you did, it doesn't mean that the price that you paid for that work to be done was conscionable and legal, okay? So that's where I'm coming from. Again, there's a spectrum. You might get the money and be like, I've talked to people who have worked with these companies and they're like, it was great. I got this money, even though I paid a lot, it was fine. I got this money. A lot of times these companies also aren't telling you need to go back and refile your old tax returns and reduce the payroll expenses you took. And then that will increase your taxes that you have to pay. They're probably not telling you that, but I digress. But a lot of people have good experiences because they got what they paid for now. Will it stick? Maybe not. But right now they're happy. And then they're referring it to other people saying that they should do it too. And this just is going to continue. And let me tell you, the IRS has put more agents on this. They have said that this is bigger than what PPP fraud was. And I think a lot of people assume that if it's a big company or a name they know or a face that they know, right? Or anything like that, that this is probably reputable, or they're hearing it on a place that they find reputable, right? But I want to caution you, okay? Because not everybody is aware of this, and there are people, that are being paid to promote these ERC mills and maybe don't recognize what they really are, because they can be a little bit difficult to recognize. Okay, so I hearken back to PPP when I was yelling and screaming about one particular company that was all over the place. They had ads everywhere. NPR was running ads for them, right? Which seems reputable. If they're running ads on NPR, they probably checked into them. Well, yeah. But at that point, they were clean. It wasn't until later that the IRS said, actually, they were doing a whole bunch of suspect stuff, right? Which I had been yelling about for a really long time. Those that were around know what I'm talking about. So be careful, just because you're like, well, why are they still, wouldn't they be shut down by now? This unfortunately takes a ridiculously long time. I am going to put in the comments here the form that you can fill out if you have been, if you have worked with an ERC company or potentially worked with an ERC company that you felt was a little bit suspect, or you weren't sure if they were telling you correct things, or now you're kind of second guessing. You can fill out that form for the IRS, and they are compiling those, and then they will be starting their own investigations on this. But again, it will take some time. So this isn't something you're going to see happen overnight. These people are going going to continue to sell this as long as they possibly can, because again, right now we are in an opportunity where the government is giving out hundreds of millions of dollars on this credit. So these people are going to try to squeeze as much out of this moment as they possibly can before they move on. And it's really important that we are reporting them, that we are staying vigilant, okay, as consumers, and not over trusting any of these. If something feels wrong, if you feel like, they're being very, very salesy towards you, if it's very aggressive oftentimes, if you don't see their faces, if the company doesn't have much of a history, if you don't know what their actual background is to be able to do this, right? Again, like I said, some of these companies, I kid you not, I have a video of one specific company that is training their workers, on how to use my worksheet that they did not pay licensing rights for, that they are using without my permission, but they're literally training their workers to use that and then turning around and charging hundreds of thousands of dollars to their clients for the work that is being done. Y'all, this is personal. This is personal to me. Okay, I'm taking a breath, and hopefully you see what's going on here. Okay, so your question may be, what do I do now? Right? What do I do now? Maybe you've used one of these, or you're not sure if it's somebody that you can trust or not. Here's what I would do in your place, okay? If you have already applied for ERTC, already gotten the money, okay? I want to make sure that you have all your ducks in a row. Okay, make sure you have all of that documented. Expect an audit. I would honestly just tell everyone who's getting this to expect an audit at some point and be prepared. So if you can prepare now, you have a better chance of that standing up under audit and not having to give back that money. So here's what I would do. If you qualified based on a drop in gross receipts, that's pretty easy. Just make sure you have all your financial statements to support those percentages and the drops that you actually saw. Okay, that is going to make it a lot easier. If you got PPP, make sure that you have support for how you treated that PPP, and that you didn't double dip ultimately, that you didn't take money for the same exact wages. And that can get a little bit complicated. Again, if you worked with a company on this, they should be able to give you all of the support. Make sure they are giving you all of the support that you need in case of audit. I would also ask them what kind of support that they offer in terms of audit. That's a great question when you're talking to people about this, to say like, hey, what does your audit support look like? Is that built into this? Is that separate? Is that something that you don't do at all? Right? Ask those questions. Always ask questions. That's the best way to ferret out when something isn't quite right? And the other thing I want you to do, if you qualified based on a partial or full suspension, make sure you have those governmental orders. Again, if you worked with a company on this, they should be pulling that for you. If they told you you qualified, they need to give you those specific orders that should have dates, that should align to the dates that you are claiming your ERC, right? If you were shut down from April 15th to July 22nd, you can't qualify for all of, Q2 and Q3. You should only be qualifying during that time period, and you need to show that that applied to you and it had a more than nominal effect on your business, okay? You have to have all of that documentation. If you don't, then you need to get it together. And if you worked with a company, that is something that should be in the cost that you paid to that company. Okay, so reach out to them, make sure you have everything that you need. It is well documented so that if something happens, you have that support. Now, if they won't give it to you, or you get the support and you're like, this doesn't really look like I would expect, and I don't see a governmental order here specifically, if they're saying that you qualified because the supplier was shut down, well, where's that governmental order, and where's that justification that they should have written out as to why that had a more than nominal impact on your business? All of that should be documented. Do not just assume everything's fine, because again, I want you to always be working under the assumption that you will be audited, and make sure to gather all that evidence now. Okay. All right. So that's it. And also, like I said, I'm putting the form to report this to the IRS if you do think that there has been some questionable things. If you think you have been approached by or worked with an ERC mail, make sure to report that. Again, the more people that report them, the more they will be going after and know who to go after in this, because otherwise, unless they have a whistleblower on the inside, they really don't know who is doing this correctly or not quite yet. Okay. Not until they really get into all these audits and start figuring out the patterns that are there. And by then there's not much that can be done in order to really, help you. So, all right, that's it. Y'all are amazing. Thank you for letting me go on this rant. I have been wanting to do this for a little while, but it has just reached a fever pitch where I am so frustrated by all that is going on in this space. I am a huge proponent for truth and ethics. That is something very, very, very important to me. The only thing that I have to sell, like I said before, is my spreadsheet. Buy it for yourself. Don't buy it to use for commercial reasons, please. And thank you. JamieTrell.com/ERTC. All right. And make sure to also comment down below or send me a direct message on Facebook or Instagram or wherever if you are aware of other companies you think I should look into, or if you're aware of other companies who are using my intellectual property. Maybe you've seen my name on a spreadsheet or something that they have been using. Please let me know. The only way that I find out about this is because people see my videos and realize that this is happening. So I definitely appreciate those who have come forward and told me what's going on, because it really helps me to be able to stop that. I don't want my name associated with bad actors at all. So thank you for coming forward and telling me about that. Thank you all. You guys are amazing, and I'll see you next time.